Is your stomach churning every time you check your portfolio? Watching those numbers drop? Feeling that knot of panic tighten as headlines scream market crash and recession? You've worked hard for your money, and seeing it potentially vanish feels terrifying. Stop. Breathe. Before you hit that panic sell button, you need to watch this. In the next 10 minutes, I'm going to show you why freaking out is the worst thing you can do right now, and give you a clear plan based on history, not hype. Stay with me. Market meltdown, your savings gone, recession fears. Okay, let's acknowledge it. Yes, the market's taken a hit. We're seeing the S&P 500 finished down nearly 20% from its peak from recent highs. Uncertainties created by tariffs and retaliatory tariffs have led to higher inflation expectations, increased market volatility, and disruptions in global supply chains. It feels fast, it feels scary, and it directly impacts your savings, your retirement plans, your future. The urge to just get out is strong. I get it. But reacting emotionally is where investors lose the most. But here's the crucial part. Your fear is forgetting. Markets are resilient. They've faced turmoil before, and they've always found a way to bounce back. We've been here before, many times. Each crash, no matter how devastating, has been followed by a recovery, often stronger than before. Remember Black Monday in 1987? It was one of the most dramatic days in financial history. The market plunged over 22% in a single day. Panic was everywhere. Yet, despite the chaos, what happened next? Recovery. The market rebounded, proving once again that resilience is at the heart of its story. Fast forward to the dot-com bubble bursting around 2000. Tech darlings vanished overnight. Market sentiment was abysmal. But eventually, recovery. And who can forget 2008? A year etched in history when the world witnessed one of the most severe financial meltdowns in modern times. The global financial system was on the brink. Fear was palpable. Banks collapsed, homes were lost, and millions faced unemployment as economies spiraled into chaos. Yet, the market clawed its way back and reached new highs. Resilience and reform paved the way for recovery, proving the strength of human determination and innovation. Even the sharp, shocking drop in 2020 during the pandemic, followed by a remarkable rebound. See the pattern. Throughout history, markets have faced turmoil, chaos, and uncertainty. Yet time and again, they have shown resilience. Every single major crash in modern history, no matter how terrifying at the time, was followed by an eventual recovery and often significant growth. The darkest moments often paved the way for the brightest opportunities. History doesn't repeat exactly, but it often rhymes. Patterns emerge, showing us that recovery is not just possible, it's probable. Panicking and selling at the bottom locks in your losses and makes you miss the inevitable rebound. Staying calm and focused can turn uncertainty into opportunity. So, what should you do right now? Well, forget the noise. Seriously, just block it out. Focus on strategy. First and foremost, do not panic sell. It's a natural reaction, but often an emotional one. Unless your fundamental financial situation has drastically changed, selling into fear is usually a mistake. Take a moment to reassess calmly. You turn paper losses into real ones. This can hurt your long-term financial goals, and that's not where you want to be. Stay focused on your strategy. Second, zoom out. Think long-term. It's not about quick wins, but steady progress over time. Are you investing for next month or for 10, 20, even 30 years down the line? The difference is monumental. If you have a long time horizon, like for retirement, these dips are just blips on the radar. Patience is key. Honestly, market volatility is the price you pay for the potential for long-term growth. Stay focused on the bigger picture. Third, reframe your mindset. Is this an opportunity to grow, learn, or invest wisely? Remember the famous Warren Buffett quote, "Be fearful when others are greedy and greedy when others are fearful." This wisdom often applies during uncertain times. Market downturns, well, they essentially mean quality investments are on sale, offering unique opportunities. If you have cash available and a long-term plan, this could be the perfect time to act. Dollar cost averaging or strategically adding to your positions now could really boost your returns later, setting you up for future success. Fourth, review. Don't react. Is your investment plan still aligned with your goals and risk tolerance? It's totally okay to review, but don't make drastic changes based purely on fear. And of course, ensure your portfolio is diversified. Fifth, stay consistent. If you have a regular investment plan, like contributing to a 401k or RRSP, just keep doing it. Buying consistently means you automatically buy more shares when prices are low. Quick bonus tip. During uncertain times, it's also smart to ensure the rest of your financial house is in order. Review your budget, build up that emergency fund, and maybe even look into securing your financial data online. Oh, and by the way, pick up my new book titled The 21-Day Wealth Builder Blueprint. Transform your finances in just 10 minutes a day. It is yours for free. You can find a link to it in the description of this video. Speaking of security, if you're worried about not being able to build the right financial mindset, check out one of the highly watched videos on this channel titled Unlocking Emotional Money Hacks. Look, market downturns are never fun. They test our nerves. But they are not the end of the world, and honestly, they are a normal part of the investing cycle. By understanding history, focusing on your long-term goals, and sticking to a sound strategy, you can navigate this turbulence without derailing your financial future. Don't let fear dictate your decisions. Stay calm, stay informed, and stay invested for the long haul. You've got this. What are your biggest concerns right now? How are you handling this volatility? Share your thoughts in the comments below. Let's support each other. And hey, if you found this helpful, please hit that like button and subscribe for more no-nonsense financial insights to help you build wealth, even when the market looks scary. Thanks for watching, and I'll see you in the next video.